So next question says, which type of portfolio might a young investor who is not afraid of risk choose? 1 says a portfolio with a high percentage of stocks. 2 says a portfolio with a high percentage of conservative mutual funds. 3 says a portfolio that is mostly cash. And 4 says a portfolio with a high percentage of treasury bonds. So a young investor who's not afraid of risk would likely take on a portfolio of high risk. And in this case, A is going to be the best answer. Stocks is clearly the most risky investment out of the 4 types of investments noted. Stocks fluctuate daily. They can drop 10% in a single day, 20% in a single day. And so that's a really risky investment. And so it's high risk, high return. It's possible to lose a lot of money investing in stocks. It's possible to win a lot of money investing in stocks. 2, it says conservative mutual funds. And if it were just mutual funds, it would be a more diverse portfolio. And secondly, because they're conservative mutual funds, it's likely that these are fairly safe investments. And so 2 is not going to be very risky compared to 1. 3 says mostly cash. And if you invest mostly in cash, you have very low risk just because cash earns very little returns. And you don't really lose any money, but you don't really gain any money. And so cash is very safe. And D says higher percentage of treasury bonds. And again, treasury bonds are really safe investments. They're considered, they're very liquid, very sellable, very low liquidity risk, very low interest rates. So low risk, low return. So for this situation, a young investor who is not afraid of risk will choose a portfolio with a high percentage of stocks. Let's take a look at the previous tutor's answer. The previous tutor also said 1, a portfolio with a high percentage of stocks. It has to be noted that a young investor who is not afraid to risk is risk averse and hence is likely to show a high tolerance to volatility. Such an investor is likely to incline towards an aggressive investment strategy. An aggressive investment strategy seeks to maximize the potential return by embracing a higher degree of risk. This portfolio management style focuses on capital appreciation rather than the safety of the principal invested. Such a young investor who is ready to take the risks to yield greater returns, even if it means absorbing a capital loss in the short run, is likely to choose a portfolio with a high percentage of stocks. The investor can invest in risky classes of investments like commodities, high yield stocks, equities, etc. So great. This is a good answer. And so that's going to be a good wrap up for this question.